So the reason you are not where you want to be as a trader is because of one word: fear. Fear keeps you grounded, making the same horrible mistakes over and over each and every single day. See, I know this very well because I traded in the market for 4.5 years with massive amounts of fear. When fear is present, you cannot logically or cognitively make proper decisions. This is why, when you're looking back at your trading journal, you literally want to vomit because you are making decisions with an IQ the size of your shoe because of fear. When fear is present, you cannot think properly. You cannot execute. You cannot retain all that beautiful knowledge that we've gone over because fear is present. We are so afraid to fail. And my goal in this video is to help shift that perspective. I'm going to show you some tools that I use that keep me from diverting back to being extremely anxious and stressed out, right? Because we put so much value on having a green day. We go on social media, we see all these traders making hundreds of thousands of dollars a day, and it stresses us out because we understand the concepts. We may even understand the principles, but we cannot execute properly. Fear is literally costing you your dreams. It's costing you your life. I know this. 4.5 years I spent showing up to the market over and over, and I used to think the longer I traded, the better I was going to become. But in reality, the longer you trade the wrong way, the harder it is to break out of this horrible, vicious cycle that's costing you your dreams. So today in this video, we're going to break down how I use the 1 hour time frame, how I use the pit numbers, and more importantly, how I use the moving averages to stay grounded and execute without fear. And the number one thing, guys, and I'm not going to sugarcoat this to you whatsoever, but to get rid of fear, you must outwork it. The only way to outdo fear is to outwork it. You need to be collecting data. You need to be studying. You need to be on demand, trading, replay. Doesn't matter what it is, but you have to put yourself in the trading environment without any emotion, not just a stimulated account, right? You literally need to be on FX replay or on demand on TOS, collecting data, reviewing it, and leaning on the principles and data that you collect. And this is why I give so much of this away for free. If you click the links below, you'll see I literally generate high-level summaries on strategies, and I give this away to anybody that wants it, because the more you study the data, the more you believe and trust in the data, the easier it is to make decisions. You'll be trading on the right side of the market, and you'll be trading a specific strategy that has a specific win ratio, right? So let's break into it. The day we're going to be talking about is 211. And once again, the purpose of this video is to help you guys realize, once again, how important moving averages are. See, when I first started trading, I had moving averages on my chart, but I wasn't observant, and most people aren't. Most people use moving averages just to determine trend. Not me. I dive deep into what those moving averages tell us. See, if you could learn to understand what a healthy trend is, right? This is very healthy right here. Why is this healthy? There's no extension, right? Why is this unhealthy? Because of the massive gap in between price and the 9D EMA. See, you don't need to know the ins and out of the moving average. You just need to know what looks regular and what's irregular. What sort of trend or continuation do you get with a regular trend with no extensions, and what sort of outcome do you get with a trend that has extensions? If there's no extensions, there's a high probability that price is going to continue in that direction. Look at this day. We literally rallied, what is this, almost $7 this day, the whole day. Why? Well, the trend was healthy. Same with this day. Even with this massive, violent sell-off, you can see here price rallied down, sucked up back into the moving average, and then price continued. But what about this day? The day we're going to be going over. What do you see here that you don't see here? You see a massive gap in between price in the 9D EMA. That's the double exponential moving average. You guys know it because I preach it in every single video. The 9 double exponential moving average. I've done vast amounts of research and study on this. Anytime you are extended from this moving average, you are either going to A, get chopped and it allows price to catch up to it, or B, a reversal. And what I'm going to show you today in this video is how we caught, what did we catch here? A beautiful trade for over 100%. Look at this. Because we were able to identify that extension, that unhealthy trend on the 1 hour time frame in short end of day on SPX, clearing over 105% ROI. One contract, $730. Right? So let's break into it. So anybody that has been following me for a while, you guys know every single day I identify the pit numbers. The pit numbers are your previous day high, low, open, close. These are the 4 main price points from a daily time frame candle. Therefore, I plot them. I plot them because if I could learn to identify what's happening at these levels, I'm going to have a way better edge than 99% of traders. See, these levels hold vast amounts of volume. So if I can spot chart patterns or irregular trends at these levels, I then will be trading on the right side of the market, right? So number 1 is identify your pit numbers. Number 2 is you allow price to rally up to the pit number and then react. I took 2 trades this day. One was a loss and one was a win, right? And I'm going to show you. The first trade I took was here. We rallied above previous day low. This is very bullish. I went long as soon as this green candle wiped out the red candle. For anyone that follows me, you guys know this is my 3-step process. Identify open print, identify the moving average cross, then identify the RBI or GBI. In this case, it's a red bar that was ignored, so that's a RBI in long, stop below it. News came out, shattered me out of my trade. Price ripped down to previous day low and rallied. Am I frustrated? Absolutely not. Why? Because I don't have fear. I know my trading edge, my strategy has a 75% win ratio over the last 6 months. Over 88 trades, 67 of them were profitable. So do you think I'm worried? Absolutely not. All I know is when I see this criteria, I'm in the trade, right? It is what it is. 75% of the time it works, 25% of the time it doesn't. That's over the last 6 months. I'm not going to let one losing trade bother me. Instead, I'm going to allow price to do its thing and rally on up to EOD or wherever it's going to go. And then once price gets up here, I now have a decision to make. How am I going to make that decision? Well, I'm going to revert back to the 1 hour time frame. Look at this chart. See, I am very aware of what a healthy relationship looks like and what a unhealthy relationship looks like. And we just went over this. This right here in front of us is unhealthy. Why is it unhealthy? Because once this 11 o'clock candle opened, price was up here at 604.72. The 9D EMA on the 1 hour was all the way down here at 603.76. This is literally $1 away. So therefore, that is what we call opportunity, right? Once again, we're not trading with fear. We're not just going to rush into the market. We're not just going to chase because it's still going up, right? We're going to ask ourselves logically, where's that 1 hour 9? What principle are we going to refer to? The principle of the moving average. The principle states anytime you're extended from a moving average, you are either going to get a reversal or you are going to get chop, right? So once again, price is rallying up. So now all I need to do is identify weakness. I need to identify a way to get into the market with low risk. That is my job as a trader each and every single day, and yours too. Manage capital appropriately. Price rallies up to EOD. Let me ask you, does the price action in front of you look strong? Absolutely not. Why? Because these red candles keep rejecting EOD. So let's go to the Discord and I'll show you exactly where I got into this trade. So right here at 11:51 a.m., I'm in short stop above EOD, right? So this is what the market looked like when I decided, hey, I'm going to take the market short targeting EOD. Right? And then you can see here, or in short off EOD, I'm targeting downside targets, right? First target 604, right? Price ripped up. See the green bar here that was completely ignored. So at that point, I'm getting in the market short. My stop's above the green bar. If price goes above that green bar, my trade plan has been invalid and I no longer have a reason to stay in the trade. That is once again another way to completely diminish fear. Have a trade plan. And I know everybody says that, but actually do it. If you can develop a very simple way, this is why I use the red bar, green bar, ignored entry criteria. Because every time I'm entering the market, my philosophy tells me I can only risk the bar that I'm entering off of, right? So if I'm entering because this green bar was just ignored, my stop therefore goes above the green bar, right? Get rid of all the question, right? Through my 5 years of trading, I realized don't make it unique. Make it a process. Approach it the same way each and every day, the same exact way. Put in the same input, get the same output. And what I mean by that is have the same mental approach. Have the same perspective. I'm only ever going to risk one bar, and on my profitable trades, I'm going to make 2 bars, 3 bars, 4 bars. Use that approach. It's very simple. Price rallies here off EOD, and you can see here I'm updating here in the Discord as this continues to sell off. Beautiful stop here, hits our first target, and then we add a contract on this. Once price then makes another beautiful green bar that was ignored here, so putting on another contract, and then price sells off all the way down to open print, right? We cannot make this up. The market moves a specific way. It is governed by principle, right? The pit numbers. If a pit number gets rejected, there's an 88% chance that it's going to go to the next pit number, right? Learn, study. I've been collecting data on this for the last 2.5 years. It's all on the Discord. If you guys are looking for a massive resource and you're trying to use the data I have, if you want to be a part of the team that trades without fear, that lets the principles guide them, click the links below. Right? But this was the trade that we took. It was absolutely beautiful, and I was very proud of it. Why? Because we used that 1 hour 9 to identify opportunity. We used our simple red bar, green bar approach that keeps our wrists tight, and we executed flawlessly. Guys, I hope you liked this video. Make sure you hit a like, send it to somebody that needs it. Click the links below, get affiliated with HBT, and I'll see you in the next lesson.